1 million plates of beef and mutton, and 800,000 cups of milk tea. These astronomical figures of food were all consumed by 1.5 million people during the 7-day Spring Festival holiday at 1,000 restaurants owned by the Hong Kong-listed catering giant Shabu Shabu. All signs are that the catering group that made its IPO debut in 2014, the first hot pot brand to be listed in Hong Kong, has found its own new growth path, even amid the challenges brought about by the COVID-19 pandemic. Just 2 years after its IPO debut, the group created a new brand targeted at medium and high-end consumer groups. And in the first half of last year, that brand accounted for 40% of the group's overall revenues. It's even expanded into Hong Kong and Singapore. You can tell from the long queues outside fashionable restaurants these days just how fierce the competition is becoming in the catering business. The customers are looking for something new.
I eat outside 3 or 4 times a week, usually for 100 or 200 yuan per person. There are so many choices now, I will try whatever is new.
I try all the popular restaurants. 70 or 80% of them are pretty good.
With all this business, many restaurant chains are speeding up their plans to get in line for a stock market IPO of their own.
In less than 1 year, 8 Chinese restaurant chains like Country Style Cooking and Want Hot Pot have come out with IPO plans one after another. One of the most recent is the spicy hot pot chain Yang Guofu, which has already filed for an IPO in Hong Kong and is expected to become the first IPO of its kind. Interestingly, most of the catering firms coming out with IPO news now are chain brands, usually serving affordable and typical Chinese fast food.
Chain brands usually have lower entry barriers and high standardization. They expand fast, so revenue and profits can grow in a short period of time, and that's good for share market gains. The outbreak has accelerated the survival of the fittest on the markets. Some even opened more stores during the pandemic, speeding up their expansion. That gives investors hope of faster growth.
An investor in China's catering industry for the past 4 years, who says it was between the second half of 2020 and the first half of 2021 that many investors started to look seriously at putting money into catering brands. That means now turns out to be the right time for those brands to debut on the stock market, to the benefit of both primary investors and the brands themselves.
When we used to invest in catering firms, we would usually get revenue from the dividends. Then it was hard for us to exit the investment because catering firms used to have problems in going public. It was hard to trace their income because so many payments were made in cash. But now, China has improved its infrastructure. There are new supply chain firms upstream, making detailed accounting possible. And the prevalence of digital payments has made it easy to supervise downstream.
Who predicts that there will be 3 more batches of catering firms going public in the next 8 years, but that the market should stabilize after that. Those which have made their IPO by then will be likely to merge or purchase new small brands. So making an IPO debut on the stock market now could well be a new start for the restaurant chains and for the industry itself.